Imagine standing at the edge of a river, watching boats cross from one side to the other. Some glide smoothly, while others struggle against unexpected currents. No matter how careful the rowers are, every boat that ventures into the water takes on risk. The same is true of the financial markets. Every time you place a trade, whether you are an investor, a day trader, or an options strategist, you step into the current of uncertainty. Risk is not optional, it is the cost of participation. In trading, risk refers to the possibility that actual outcomes will differ from expectations. When you buy a stock, you risk the possibility of its value falling. When you sell an option, you risk unlimited losses if the market moves sharply against you. Even holding cash carries risk, since inflation eats away at its purchasing power. The truth is unavoidable: no strategy, no matter how sophisticated, is risk-free.
Over 93% of traders lose money in the markets, not because of the market, but because of their mindset. Hi, I'm GC Sharma, founder of Ghar Ghar Investor, former head of financial education at the National Stock Exchange. After 3 decades in the markets, I'm here to help you trade with discipline, not emotion. Welcome to Bounce Back Trader, India's free YouTube learning series for traders who want to bounce back with clarity and confidence.
Many beginners enter markets hoping to find a zero-risk strategy. They chase tips, copy-paste trades from social media, or look for magical indicators. Some believe that hedging alone eliminates all danger. But the illusion of risk-free trading is dangerous. Hedging reduces risk, but never eliminates it entirely. Even government bonds carry interest rate risk. Even fixed deposits carry inflation risk. The only way to truly avoid risk is not to trade at all, and that choice itself carries the risk of missed opportunities. The first step toward disciplined trading is not to avoid risk but to accept it as inevitable. Accepting risk changes your mindset in several ways. You stop chasing the fantasy of perfect trades. You focus on controlling losses, not eliminating them. You measure success not by avoiding losses, but by managing them effectively. This shift is what separates gamblers from professionals. Gamblers hope to beat risk. Professionals learn to live with it. Take the case of an option seller in India. He sells nifty weekly calls, collecting 2,000 rupees in premium. For weeks, nothing goes wrong, and he feels invincible. But one sudden rally in Bank Nifty wipes out 20,000 rupees in a single day. Why? Because he assumed the absence of risk in the short run meant no risk at all. If he had accepted from the start that unlimited risk exists in naked option selling, he would have sized his position conservatively or hedged. Acceptance of risk breeds humility and better preparation. Indian markets are known for sudden, unpredictable moves. Election outcomes can cause Nifty to swing 5% in a day. RBI policy surprises can move banking stocks sharply. Global factors like US Fed announcements or crude oil spikes ripple instantly into Dalal Street. Retail traders often fall victim because they assume markets will behave normally. When extraordinary moves occur, they are caught unprepared. Accepting risk as part of the game helps Indian traders survive volatility instead of being destroyed by it. Traders who deny risk suffer in 3 ways. 1. Financial loss. Small oversights balloon into devastating drawdowns. 2. Emotional stress, anxiety, fear, and regret dominate decision-making. 3. Lost learning. Instead of improving their process, they blame luck or the market. Every blown account tells the same story: a trader underestimated or ignored risk. Risk is not the enemy. It is the partner of reward. The possibility of loss is what makes profit possible. Without risk, there is no premium for returns. The goal is not to run away from risk but to balance it against potential reward. A trade with a defined stop loss, reasonable position size, and a 1:3 reward ratio is a professional approach. A trade with unlimited downside and no exit plan is reckless. Both carry risk, but only one makes sense. Overconfidence, believing past success guarantees safety. Blind leverage, taking oversized positions because margin allows it. False safety in hedging, thinking that adding one hedge removes all danger. ignoring black swans, failing to plan for extreme but rare events. These mistakes don't come from markets, they come from the refusal to acknowledge risk. Professionals treat risk as the price of admission. They do not panic when a trade goes wrong, because they expect losses as part of the process. They protect themselves with strict position sizing, non-negotiable stop losses, diversification across strategies and instruments, continuous learning and journaling. For them, every trade is like boarding a plane. Turbulence is expected, but safety protocols ensure survival. Consider two traders, Samir and Ritu. Samir enters trades based on tips, assuming they are safe. He puts 50% of his account into one option trade. When it fails, his account is down by half. He quits trading, blaming bad luck. Ritu, on the other hand, accepts that every trade is uncertain. She risks only 2% per trade, sets stop losses, and tracks her performance. Over the same period, she loses on half her trades, but none threaten her survival. At the end of the year, her account grows steadily. Samir sought to avoid risk. Ritu accepted it and managed it. Risk is not optional, it exists in every trade and even in not trading. The illusion of risk-free strategies destroys traders. Accepting risk transforms mindset from gambling to professionalism. In India, sudden market moves make acceptance of risk even more critical. Professionals don't avoid risk, they control, contain, and prepare for it. Write in your journal, what risks am I exposed to in my current strategy? Stop searching for risk-free methods. Replace the question, how can I avoid risk, with, how can I manage risk? Define a maximum loss per trade and per day. Backtest your strategy to identify how it performs under extreme volatility. Accept risk as permanent and discipline as your only defense.
You've just completed another lesson of Bounce Back Trader. Remember, trade with discipline, not emotion. Subscribe to the channel, share your thoughts in the comments, and continue your journey in the next video. Let's change that 93% story.